Welcome to the OSBI Fraud Awareness webinar. Today we're going to talk about fraud awareness. So what is employee theft? That's the main thing that we're going to look at today. And it can be a number of things, ranging from theft of cash, property, time, or resources. Why do employees steal, you would ask? Well, there's opportunity, they may have motivation to steal, and then they often rationalize the reason why they steal it. It could be emergency situations that cause financial hardship, such as a loss of a job, medical expenses, running out of money for Christmas or birthdays. So let's look at them individually. So often people find that they have pressure from financial constraints, from just need of money for other reasons. They don't have any other resources to turn to. So then they look to, where is the opportunity that I can find some money? And some of the opportunity arises when they're at work, and those opportunities may present themselves in the way of lack of controls. So they start taking a little bit of money here and a little bit of money there, and no one's noticing, so they keep on going. No one's monitoring themselves, and there's no inventory checks. So inventory checks would be your property rather than the cash itself. There we go. Okay, sorry about that. So rationalization. So a lot of employees will think, well, they don't pay me enough. They'll never miss the money. They owe it to me. I need it more than they do. And they're insured for it. So they're thinking that it's okay. In their mind, they're rationalizing the reasons why they take it is no big deal. So this graph presents what OSBI crime losses have been over the last 7 years. So you can see that it goes along, there's spikes and dips. The big spike in 2014 results from one large loss that was, $500,000. So it creates an anomaly there. But in the most part, we're seeing about anywhere between $150,000 and $200,000 per year for loss of money through school boards. Keeping in mind that the policy has a $500,000 limit, so when you see a claim reach the $500,000, in many cases it's exceeding $500,000, and the board is left to just with the loss. So the crime policy covers the board for loss of money, securities, and other property, which is caused by theft of an employee, a board member, or volunteer. It also covers loss of money and securities from a bank or bank premises, safe, a night depository. So here it's not loss of property. That's the difference between the first one and the second one. The third one, loss of money and securities while being conveyed by a messenger. So if you have someone who's doing a night deposit, taking the bank deposit every day to the bank, and they are robbed, then the policy would pay to reimburse the board for that loss of money. Also, we're looking at loss sustained by way of money orders, counterfeit currency, and also depositors fraud. That doesn't happen as much. Most of the losses come from number one, which is the loss of money. We do have some loss of thefts, and I'm going to go through a couple claims just to show the differences in the types of crime losses that the boards have experienced. So we'll start with theft of property. So in the first case, we have a purchasing officer who orders 200 PC desktop units and monitors under the board's account. However, only 100 of them are delivered to the schools, and he sells the remaining 100 and pockets the money. This is a cost of $340,000 to the board. We recovered $97,500. So it's within the limit of the policy, so the board was made whole, and we did recover money from the individual. Lots of times these recoveries take years to get, and taking $500 a month. Another case that we had was a facility officer has authority to hire and pay contractors for renovations and new builds for the board. He renovates his house and has the contractors add the cost to the invoices for work being done at the school locations. The claim cost is $300,000. This claim was a little hard to actually determine how much money, because we had to go through all the invoices that the board had for several projects that were on the go and try and remove the costs that seemed unreasonable or really didn't apply to the board. This could have been an increase in hours, an increase in material costs. So it was a very difficult claim for the board to try and figure out how much money he actually stole from them. He was charged and convicted and sentenced to jail. And we spent over 10 years recovering money from him, in this case, $500 a month. We recovered $82,000. So you can see we're never recovering the full amount of the loss, but we are making sure that the individual knows that we're serious on recouping our money. So risk management tips. So you should be having dual authorization for purchases. So, you know, if one person has authority to purchase, someone else should be looking at what is being purchased and also authorizing that. So at least you have two people looking at the paperwork. The person that issues a check should not be the same person who purchased the items. That creates quite a risk because no one's really watching what that person's doing. And I know it sounds like it seems you're saying there's a lack of trust. There's not a lack of trust. What you want to do is close the window of opportunity, because you never know, even the best employee sometimes gets into those financial straits, and because there's an opportunity, it may lead them down this path where, you know, they have an opportunity to fraud the board. Office supplies should be controlled by one individual. This seems kind of petty, but it seems that this can add up quite a bit. And some of the studies that I've looked at, they're saying, you know, employees lose, you know, upwards of $50,000 a year, depending on the size of the company, from employees taking home Post-it notes, pens, staples, staplers, calculators, things that they need at home, and they just think, oh, it's just a little thing, nobody will notice it. Well, if you have a number of people doing just those little things, it starts to add up quite a bit. And usually office supplies aren't controlled very well by inventory because there's so many little pieces. So it becomes very difficult to even notice the dwindling of those supplies over the course of the year. So if you have one person monitoring, ordering them, for example, so one person ordering them, and again, you want the dual authorization, you have someone else looking at that list and authorizing that it's okay to order those items. And maybe you keep them in a locked supply cabinet and people have to request supplies and that you're doling them out. That seems extreme again, but it will save you lots of money. So another non-cash type of loss we have is through theft through payroll. So we have an employee who's responsible for payroll. He created 2 fake employee records. The employee set up a regular payroll checks to be issued. The employee then went on vacation during the pay period. The fill-in employee couldn't figure out who these employees were. The IT was doing a routine system check apparently at the same time the employee was deleting records upon his return from vacation. So he would often go into the system and remove the transactions that he had done so that there was no trace. So once it was posted to the GL, he would try and get rid of the audit trail. So IT was alerted because it seemed weird that the employee was in more than just entering stuff. The investigation revealed that there was false accounts, and so $504,000 was stolen from the board, and we paid out the policy maximum of $500,000. And through this, there was no avenue for any kind of recovery from the board, from the employee, I should say. So another example of non-cash thefts. An employee, an office assistant, stole grocery gift cards that were in the school safe. These were part of the school's breakfast program. It amounted to $26,000. So again, this is items that are laying around, not locked up. And gift cards are cash, and usually they're not registered. So anybody can take a gift card and use it at a store. The store is not going to check for the registration of who's using it. They're not going to ask you for any ID. So it's like cash. Another example is a number of TTT tokens were stolen by unknown persons during school hours. The incident was recorded on the surveillance camera and reported to the police. However, the surveillance camera didn't really pick up the person's identity. So we know it was someone at the school. We couldn't confirm whether it was an employee or a student, but this was because the safe was unlocked and easily accessed. When a school has bus tickets or tokens for transportation, usually the students and staff are aware that the school has these on the premises. And so if you're leaving them in an unlocked safe, again, you're creating an opportunity for someone who's in need to grab those. what we find in these types of cases is that they're not using it for personal use. They're actually selling those tickets or the gift cards and creating a profit. So, if you have a gift card for 25 bucks and you sell it for 20, someone thinks they're getting a deal and you're getting 20 bucks in your pocket. And another type of non-cash theft, a board employee uses his board credit card for personal use and racks up $54,000 in expenses. And this is a situation, again, where there's no audit controls in place, that the Visa card payment statement comes into the accounting department, and they simply just pay that loss. They pay the account, and they just keep paying it because they feel, the person who has the card is authorized to have it and is trusted to only make purchases that are business related. So again, Visa statements should be checked to ensure that the transactions on those statements are school related. So risk management tips, I've talked about some of them. Keep gift certificates, bus tokens, etc. in a locked safe. A logbook should be used to control the usage and recording of the items. So if you have, 100 gift cards in, you should be recording them, record the numbers on the back. If you do this, then the police do have something to go on. We had a theft of some Presto cards in Toronto, and they did have the registration number of each card, and the TTC worked with as well. They could tell when they were being used, and what they did, because they had all those numbers, they went in and they deactivated all those Presto cards, so the loss was controlled. So if you're keeping track of the gift certificates, bus tokens, anything that has a serial number on, there is a way to trace them. As far as them being used, it's usually not traced back to an individual, but you can also go to those companies and they will put a stop on them. It's like a stop payment on the check. You should have procedures in place to control access. So again, they shouldn't just be there for anybody to grab. It should be, doled out and recorded. So now we're going to get into the most frequent type of losses that we see, and these are cash thefts. And there's multiple ways that cash is stolen from schools, and I'm just going to go over some of the more common areas. A school secretary managed all the accounts for the high school. And she had all the cash from the yearbook sales, from the trips. The cash would come into her. Her job was to deposit that money into the bank, and then at some point in time, then, write out the check and have the principal sign the check for any expenses incurred as a result of these fundraisings. She didn't deposit all the money. She deposited some of the money. Her intent, this again started out, you hear their stories when you're investigating the claim, is that, initially she just needed $1,000. No one noticed, and then she needed a little bit more money and a little bit more money. We found out through this that she did have a gambling habit. Even her husband was not aware of the habit that she had, or the amount of money that she had stolen, or their finances were in dire straits. Their bank account had been drained. She was charged and convicted. She did serve time, and there was no recovery on this because there were no assets. She had amassed a large amount of credit card debt. She had taken out line of credits, and so their house was mortgaged to the hilt by the time they were able to resolve some of those issues. So with the school secretary, where you get that is the opportunity. You have one person, it doesn't have to be the secretary, it could be the principal, it could be the vice principal, who is managing all the money coming in and out of the school. And again, you want segregation of duties. Who's ever receiving the money, they should be counting it, preparing the deposit. Someone else should be doing the deposit. The principal should be checking the records at, I would say, in your high season when you're collecting a lot of money, it should be checked weekly to see what money has come in and what money has gone out. The other claim that we had was interesting, was a board employee. Volunteered for the Athletic Association and submitted invoices to the board for fake services and supplies that he alleged the Athletic Association had incurred. And since the Athletic Association is an arm of the board, they were reimbursing the Athletic Association. So what you had was he wasn't giving the board money because it would go to one person, and a different person would be issuing the checks. So the person issuing the checks wasn't checking to make sure that there was money deposit from the Athletic Association. He was charged and convicted, and he spent 3 years in jail. Policy limits of $500,000 were paid. So you can see here where the loss did exceed the amount insured. So the board was out $271,000. Another loss we had was 2 volunteers who helped out with the pizza day. They stole over $77,000 over 6 years. So they took their time in doing it. So a little bit here and a little bit there. So this was where they would order in or say that there was 50 pizzas being ordered in, and actually no, I got it backwards. They would say that there was 40 pizzas being ordered, but actually there was 50, and the cash that they got from the extra 10 pizzas would go in their pockets. So I'm not sure how they worked that out with the pizza store, but the pizza store seemed to have the right amount of money all the time. They were giving a discount. I don't think the school was fully aware of how much the discounted pizza was costing. So again, you've got volunteers. They should have been managed by a staff member. And again, you're looking for to close the window on the opportunity that is provided to people handling cash. So when I did my research, I was looking at some different stats, and it was hard to find Canadian stats. There's a lot of American stats. Theft of cash and goods by employees is costing Canadian businesses $1.4 billion a year, and that's according to the Retail Council of Canada. They say that on average, employees steal about $2,500 in cash and goods from their employer before they're caught. And you can see how easy that could be, especially with the goods or the products or supplies. That stuff just kind of leaves, and until somebody notices that they're gone, or that we're spending an awful lot of money this year, our budget's higher this year than it was last year for photocopy paper, now you start to look into it. So some risk management tips. A bank account should be set up for high value events. Don't keep cash at the school. I know a lot of schools have gone to programs such as KEV, which is a program where parents can have a profile. They can pay the lunch money, the milk money, the pizza money, the school trip money into KEV, which is part of it blends in with the board's accounting process. So that there's a lot of schools have gone to no cash whatsoever, which is not a bad idea, because then you don't have that opportunity. I've heard from some schools that there's a little bit pushback on some parents. They don't like the fact that they have to deal with this online system of e-transferring money to KEV Group. They're afraid of fraud through KEV Group. Checks should require 2 signatures. So any check issued should have 2 signatures, so that one person isn't in control of the money. If the check is going to, we've had checks that are actually being paid to Visa from a high school, and a high school doesn't have a Visa account. So if there's a second person signing that check, they would probably question, why are we paying Visa, or why are we paying Bell Canada or Rogers when we don't have those accounts? A bank ledger should be kept identifying deposit, checks, and withdrawals. So this can either be a paper ledger, it can be electronic ledger, but you should be recording the deposits, what those deposits are for. So, if you're selling yearbooks, and that will trickle in over time, so that, $200 today, $300 tomorrow. At the same time, someone's doing a field trip. So when that money comes into the secretary, it should be earmarked for exactly what it was for. If it's a high value event, a number of schools have reported back that they actually set up a separate bank account for those high value events, so that if they're expecting to collect $20,000, $30,000, that they don't want that in their regular banking system. They'll set up a separate bank account just for that event. The bank statements should be balanced at the end of each month. You need to have a look at that, and again, you're looking at segregation of duties, that the person that's been doing the deposits, maybe writing the checks, you need to have a fresh set of eyes on the bank statement, looking, again, comparing it to the bank ledger. Is everything that's in the bank ledger showing up on the bank statements? Internal audits should be conducted periodically and randomly. A lot of school boards are doing this now with their audit teams. They'll just show up and they do random audits, and it's been interesting. There are times when these audits are finding a problem. The dollars aren't adding up, and sometimes they can follow the trace, sometimes they can't. And as I've stressed all along, segregation of duties, and this I think is your key thing, segregation of duties reduces the opportunity. You're always going to have people that have motivation, they have desire, they have needs, and it's when you create the opportunity is when they're feeling the pressure of financial constraints that they'll look at that opportunity and start taking a little bit here, a little bit there. When nobody notices, the theft goes on. And as I mentioned before, that theft could be as little as $200 a month. So it's a small amount. That's high school. In the busy time, high schools are taking in a lot of money for their athletic events, for their yearbooks, for trips, you name it. So some risk management tips continued. Know your employees. Be alert to key indicators of potential theft, such as, all of a sudden you see this employee, they seem to be going on a lot more trips than they did before. They're driving a fancier car, they've moved into a bigger house, they're dressing a lot nicer. So if you've known the employee for a number of years, sometimes you can pick up on those characteristics or those new items that the person has. If it's as a woman, she's coming in with a new Coach purse every month. They're expensive, and you're thinking, I know what that salary is. I don't think they should be able to afford this. Supervise employees closely. Just sort of get to know your employees, kind of be aware of their habits, their characteristics. Use purchase orders. Purchase orders for things that are being bought that it can't be purchased. Somebody can't just call up Radio Shack and order, a dozen computers. It has to come through the office. It has to be matched up with the purchase order number. A lot of boards, however, do have a very good procurement policy, so they have identified what vendors that they wish to use for purchasing different things. So the board usually has that under control, but at the school level, if you're going through that, you still need to use the purchase order. Control cash receipts. Make sure that receipts are given for all cash. Somebody brings it in, they have a field trip going on, and everybody has to pay $20 for transportation and lunch. And the $20 comes in, and they just tick off the list of students in their class as to who's paid. They should actually have a receipt book and be giving a cash receipt to that student. And then you have a copy that is going into your deposit money that you're going to give to the secretary to put into the bank. So again, you want to have controls, and this is something that the teachers need to be aware of as well. Use informal audits, so it doesn't always have to be somebody from the board office. It can be, like every 2 months. If the VP is not involved, maybe the VP is going to be the one that's going to quickly look at the bank ledger and the bank statements, make sure things are tallying up. Track your business checks. If a check is voided, then the check stub should remain in your checkbook or somewhere so that you can see that that was a spoiled or voided check. Manage inventory and use security systems. So inventory, especially when you're looking at the large items, in the situation where we had 200 PCs stolen, there wasn't a very good inventory or management of how many objects do we have in our warehouse now, how many more are we buying, how many have we already given out to schools. So you start to lose track of, when you look through your warehouse and say, well, we've got 30 PCs left, how do you know that makes sense? Using security systems, so this is probably more in the board office where they're storing high value items, like they've got a room full of iPads and desktops and monitors. You may want to have a camera on that room so that you can see who's coming and going. So we also have non-employee thefts, which is covered by the policy. So we have a situation where the unknown individuals gained access to the office by breaking a window. $4,000 was taken from the secretary's desk. This was money collected for graduation. So money should never be kept in a desk. It should always be put into the safe, and the safe should be locked. Another case, unknown individuals broke into the office and stole $4,300 from the unlocked safe. This was for book fair and trip money. So what we find a lot of times when we do our investigation is that yes, there is a safe, but the safe isn't locked during the day because it's a hassle to get in and out of. So they just unlock it in the morning and they lock it up at night. The safe should be locked, and again, it should be controlled by 1 or 2 individuals who can get into the safe. Some of the money that just disappears, we know that there weren't any visitors to the premises that entered the office or the safe area, so we know that it had to be someone in the school. So and because the theft isn't noticed right away, if I were to say to you, okay, well, who was in and out of the safe last week, it would be very difficult for you to remember who's going in and out of the safe. So again, the safe should be controlled, it should be locked, you should be logging who's going in and out of the safe. When people know that there are controls in place, it reduces, again, the opportunity. So again, as I said, only key individuals should have a combination, log stuff. On your buildings, most school boards do have alarm systems, so if there's a break-in into the building after hours, that it is called into a monitoring station. And again, cash should not be kept in drawers. We found a lot of losses, small losses, so there might be 200 here, 500 there, where the teacher is collecting money for a field trip, and they just stick it in an envelope in their desk with that little check mark as to who's paid their $20, and the intent is that they're going to either hand it into the board or they're just going to get cash to the event person once they get there and say, here's the money for our ski trip, and rather than do a check. So cash should not be kept at the school. It should be deposited on a daily basis. And if you are doing a field trip where at the start of the field trip before you get there, money is owed to that vendor, it should be a check that you're giving the vendor from the school. So all the school money comes in for the ski trip. We've got 20 kids going on it, and let's say, you know, in total it's going to cost about $2,000 for all the ski lifts and the ski rentals. That should all be worked out before you get to the ski hill. A check should accompany you to the ski hill or be prepaid so that there is no cash being handled by anybody. So we talked about a number of things. We talked about segregation of duties. That's key. Dual signatures for checks, withdrawals, deposits. Record keeping, keeping track of stuff. Periodic audits. Lock the safe. Reduce cash on site. And provide a reporting system for employees if they suspect theft. So provide some way for them to call in confidentially, give you no confidentiality, the saying that, hey, I suspect someone's stealing some money. So the bottom line is you need to manage your risk, and loss of money is a risk. Having cash in schools is a risk. Having products that are sitting around, not inventory, that's your risk. So you need to manage your risk.